The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the December 10th terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin with some empowering beliefs. You know, there are those who have little, yet give it all. These are the believers in life, folks, and the bounty of life in their coffers, they are never empty. When we learn to give thanks, we are learning to concentrate, not on the bad things, but on the good things in our lives. Be thankful for the smallest thing, and you will be worthy to receive something greater. You know, the more we give, the more we have left. I say change your mind and change your life. Why? Because you and we really have no idea of that giant capacity we can immediately command when we focus all of our resources on mastering a single area of our lives. And one of those areas of our life that I believe we should master, well, it's trading and investing. Another is time. You see, once we master time, then we really understand that we overestimate what it is that we can accomplish in a year. And we underestimate what we can achieve in a decade. What does that mean? That means, folks, do not give up. Do not give up. Now, some of us don't achieve what we truly want, and the main cause of that is that we just simply don't direct our focus. We never concentrate our power. It's as if we dabble our way through life, never deciding to master anything in particular. Success, folks, it comes from taking initiative and being persistent and making sure that we express the depth of our conviction with every action that we take. Question: what simple action could you take right now, today, to produce a new momentum toward a success in your life? Look, this much I know to be true. The path to success, it is to take what kind of action out there? You got it. Massive, determined action. There's no abiding success without commitment. If you want to be successful, it's pretty simple. Go find someone who's achieved the results you want and copy what they do, and you'll achieve those same results. The time is now, folks, to master anything that you want in your life. Mastery, as our man Obi-Wan likes to say, it's a beautiful thing. Let's go check out these markets out here right now. We've got the Dow. It is down 5 points. S&P is off 60 cents. NASDAQ down 60 cents. So we got a flat market out there. Russell 2000 off $1.30. NASDAQ 100 off 60 cents. New York Stock Exchange down 43 cents out there. Goldilocks up $30. Silver up 63 cents. Light sweet crude up $1. Natural gas is up as well. Pretty soon the markets will be up. Now, the key here is going to be the 1808 level. I mentioned that earlier this morning on the first bounce, so we'll take a look at that here briefly. Let's go over and take a look at the 30-minute chart. 30-minute chart just simply this morning had worked itself into a oversold level. It did that as we were coming into the open this morning, into the 9 o'clock hour. So I said, hey, this thing needs to work itself off, and the key is going to be 1808. So far, so good on that prognostication, huh? Pretty cool, isn't it? It's just using a set of tools. These are the types of tools that I'd like to be able to teach you how to use out here. 1808, that was a pretty easy call to figure out where price would be moving to. Why is that the case? Well, that's the case because, number one, you're running into the 0.618 retracement area, so we're not there yet. We have not cleared that area just yet. What else is it? You know, there's I'm going to put this out on my screen right here right now. This is a This is a trading strategy that I use. I teach my clients how to use it. This is the 120-minute chart out here for the ES Mini. You can see that on the 120-minute chart. Gave a little long entry point all the way back here. This was at 10 o'clock in the evening. That was on December the 5th out there. So you can see I've also got a couple of squiggly lines. You can see that it's shifted over to red out here. That's an indication that we're starting to see a change in trend. The key is going to be whether or not price can close above and start turning these lines here blue. Now, it's a 120-minute chart that we are looking at on my screen. If, in fact, we see that take place, then the move lower was taken care of. If we, in fact, see the low here that took place coming in at what time was that? That was at the 10 o'clock time frame out here. And the low on the ES Mini out there, that was at a price level of 1802.50. That would say we've got more work to do to the downside out here. So that's the 120-minute chart. So there's a so I've got what I'll call double confirmations on several different trading systems or strategies that I use. What you don't realize is that oftentimes while I'm doing the show here, I've actually got trades that are being placed or I'm managing trades. So truly multitasking as I take a look at multiple screens out here that give me different levels to be paying attention to inside of the market on the shorter term time frame out here. In fact, right now I'll show you this is a 37-minute time frame. This actually gave me a long signal. I did that coming into the 10 o'clock hour just as we were coming on the show. And I'm not going to take that trade right there at 1805.75. I want some additional confirmation, such as a close above the 1808 level. If I can get that done, this is a 37-minute chart out here that I'm paying attention to. If we get that, then long and strong it is in the marketplace. So those are just natural resistance areas that we'll be paying attention to today. If those areas hold, that says, you know what? They now start to act as a resistance. Again, it's an intraday chart that we're taking a look at. If I were to put the daily chart up on my screen, in fact, let me go ahead and do that. We'll take a look at the ES Mini. This is light sweet crude that we're going to put up here at the moment, but let me go ahead and put up the ES Mini. That was the weekly chart out here. You can see, well, as long as I'm in the weekly chart, this thing is in long and strong mode. Long and strong mode. So on December 19th, I'm going to be holding I think it's probably a 1 to 1.5 hour workshop here. I'm going to teach folks how to use what I consider to be the most incredible tool that certainly I have ever developed out here. This has helped me to answer all of the questions about other patterns that I have learned to trade, whether that's a lightning bolt pattern, whether it's getting jostled out of a market early, you name it. This tool here, you'll see during the workshop. It is absolutely, and this is the cool thing about this, is I can teach anybody how to use this. In fact, I've done it. So that's the cool thing is I'm not just saying, hey, I can do it. I can tell you I've done it. I've taken people that are absolute novices that would look at a stock chart and say, what the heck? Now, they don't use the word heck, but they would say, what the heck does that? And what does that mean? And what is it that you see there? And I've sat them down. I did this over Thanksgiving, sat them down. I said, let me teach you something about the markets. And when I'm done with this, if you give me an hour, didn't need an hour, just needed 30 minutes, and I showed them something. I said, you'll be able to make every single market call on the time frame that you trade out there. So that's what I'm going to be sharing with folks on December 19th. Pretty soon here, probably by the end of the day, we'll have all the details on the homepage of TFNN.com. If we take a look at the daily chart out here, it gave us a nice long and strong message. It did that on Jobs Friday. Unless we see it close below 1796 out here, that's the only thing that might threaten the the up trend. Now, this is the trend here coming off of the lows back here on October 9th. Wouldn't it be nice to have this kind of a tool at your aid out there? Well, look, I know that it would be. Now, this is the ES Mini. So I did say let's go take a look at the ES Mini. So that we're the 1808ish range. Again, that's the intraday. That was 120-minute charts. That was the 30-minute charts or 37-minute charts, whichever the time frame is that I was trading on out there. So a long way to go for there to be any damage inside of the indexes, inside of the futures markets. Now, let's go take a look at what is going on inside of the indexes. Let's start off. Let's take a look at the Dow. We did look at the Dow using Basil Chapman's Chapman wave earlier today. This was the 120-minute chart here. We can see that what the Dow did was it made its move down to the lows here that came in about 2:30 in the afternoon. This is the 120-minute chart. It made the trough D out there getting down to a price level of $15,791. Right now, we are in the C mode of that A, B, C, D to the upside out here. In order to get to that fourth level, you need to see it close above 16,058. The blue squiggly line on my screen out here, that is the 9-period exponential moving average. That means that's 920-minute sessions out here. So if you ever catch me saying 9-day and we're not on a daily chart, you'll know exactly what I mean, or what I did mean to say, which is really a period. It's just simply going back and taking a look at the moving average over the last 9 bars out here. You can see that level on the 120-minute chart is 16,000 even Steven as we speak. That area here has held as a support zone. But that's on the 120-minute chart. If we go take a look at the daily chart out here, daily chart shows that price is also up against the he's up against the primary trading range boundary line. This also, I'm going to give away these tools, these peak counters, these trough counters out here, and you'll be able to use this on the Ensign Windows software. So these are some tools that I have developed. I'm going to go ahead and provide those to you for free. You'll be able to test drive those for free for, I think, at least a full week out there, including a data feed. And those tools being primary trading range boundary lines, that's what is on my screen right now. You can see at the 16,000 level. Maybe I'll apply that to a few charts out here. So right now we have seen we're trading at 16,011. You know, when you break above a primary trading range, which is nothing more than a horizontal level of resistance and or support, right now you can see that price is just hovering in that area here. We saw that nice wide-ranging bar that took place on Friday. That says that price wants higher price. Now the 9-day, because this is a daily chart on my screen, you can see that so far the move down this morning down to the level of 15,978, 15,980 was the 9-day exponential moving average. So right now, you know, if that area holds, if you are one that uses Basil's system, and there's no reason not to use it, no reason for us to not pay attention to it, that would be bullish out there inside of the markets. Of course, the MACD here has not crossed positive, so that means it has not attained one of Basil's buy modes out there, but you want to pay attention to the 9 period. So it doesn't attain one of his buy modes, but guess what? Let's go take a look at the Stevie system out here, the true trending system. That's this one. Here's the cool thing. I'm not really that interested in, well, if you're interested in buying the tops or selling the lows, then what you need to learn is you absolutely need to learn the Gartley buy, Gartley sell, the A to B equals C. You need to learn how to buy and sell the D point, which I can absolutely teach you how to do that. But the larger moves, and when you do get into those, you want to be able to see those changes in trend actually take place. They take place after a few days or so, and when those areas start acting as resistance, that says, hey, guess what? That little 1.272 butterfly that you just bought might want to turn into a 1.618 pattern. But as we take a look here at the daily chart, this has been in strong bullish mode coming off of the low. You got your buy signal right here. This is on the trading session. Oops, didn't mean to do that. This was on the trading session right here. This other wide-ranging bar, that was on the trading session of October the 10th. Let me put my crosshair up there. It makes it a whole lot easier for me. Hey, you can see another nice little wide-ranging bar. Bullish formation here. Morningstar, that was a 3-candle formation that also took place on October the 10th. Now what you can see here, nice bull sash candle on Jobs Friday. You cannot ignore those wide-ranging bars out here. Guess what? Inside of the Dow, they actually never really turned bearish. We got caution. We got that yellow cautionary sign. But guess what? We didn't run the red light, and it looks like it's off to the races inside the Dow. We'll be right back, folks.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. I will take your phone calls. Let's go to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding. How are you this morning?
Good morning. I'm doing just fine. How are you?
Excellent. I'm doing fine. Thanks so much for asking. You wanted to take a look at CLF. Was that Cliffs Natural Resources?
That's right. You know, I called you about this the other day, and
yes.
I was going to wait till we had a close over that bullish engulfing on the 3rd. Well, it didn't do it. I guess, thankfully. But but now I'm looking at it, and it's still holding up pretty good. So I'm looking for two things, and I want to see which one you would place more priority on.
Okay.
The first one is still that bullish engulfing. Would I want to close over that on higher volume? The trend line starting from, what day is that? The trend line starting on the 4th of November down, connecting the tops to the 19th. So which one is more important, and how do I do that?
Yeah, okay, that's great. Great question. So we'll take a look at that. We'll take a look at both of those with Don, folks. Cliffs Natural Resources, CLF is the ticker symbol. They're a mining natural resource company. They engage in the production of iron ore, pellets, and lump ore and metallurgical coal out there. They've got a 52-week high of 40.40, 52-week low 15.41. They pay a dividend of 15 cents quarterly. Now, the area that I would actually be paying attention to here here right now today. If you saw it close today above $25.32, now $25.33 really doesn't doesn't blow my skirt up, so to speak. But if you saw it close above $25.32, that would actually be your sign out here. So you don't, on the bullish engulfing candle, what the bullish engulfing candle really allows you to do in this case here is use the low as a support zone. So 24.30 is where how I'd be looking at that bullish engulfing candle, because you did get some follow through on the following trading session when it closed higher. So that was nice bullish confirmation. However, there is some resistance that is in place, and this is little red dashed line on my screen right now, and that's the price level of 25.32. If we see it close above that, that would actually give you a long signal. Now, what you would want to do is your stop really should be below the 24.30 level. So you need to use your entry point less 24.30 to figure out your position size. That's what I would do. And taking a look at it, it would seem to me that that would more than cover the 1.68 of the average true range out there. But that's how I would be taking a look at the trade, because if it can't close above that, then it could be setting up a further move down. So let's go take a look. We'll use a different piece of software to do that. Let me go over to my Ensign chart out here. Let me clear up the workspace here. We'll put up Cliff's Natural Resources. And what we're going to do, folks, we're going to take a look at the trend line or the channel line that Don was asking about. So I'm going to go ahead and get rid of everything on my screen out here. We'll just simply start from scratch. And I guess you've got two different ways that you can look at it. I like the channel line approach the best. And if we started with the November 4th level, what I would do is I would start with the actual close. So we're using the body of that candle, and that is 28.70. So if I use that and I start looking I'm trying to identify where we might have 2 or 3 co-located opens and closes on my screen. It seems to be about right there. Looks like a pretty good area for a channel line. And I'll come back and describe what that is. I'm looking for the same thing really along the downside. So what I used here, Don, is I used the I used the close of November 4th. That was at 28.70. That's going to connect us to the actual close of November 18th, and that's going to be at a price level of 27.50. That's also going to tie into the close of November 20th. It's going to be the open of November 21st out there. So I think that's the channel line that you would also be looking at for price to break above. So, as far as which one has the priority, why not in this case here? I think I gave you a price of about 25.43. Why not have it do both? Because they're so close to each other. Maybe it's 25.60. Because, I said, I don't recall if it was 25.43 or 33, whatever the number I gave you. To give it a few more pennies to prove itself to you, why not have it do? Now, the retracement here, the pullback is nice because it's really been on light volume, and I appreciate you alerting us to this equity. It's really pulling back into the area where it last had a breakout, which was wide price spread and accelerated volume, which was the October 25th area. That's where it's really trading into, and so if it's going to be maintained inside this descending price channel, that says that what you should expect here is a move down to October 25th, that low 23.81. Of course, when I take a look at, hey Don, can you hold on through the break?
Sure.
Okay, didn't realize of course I'm long-winded anyways. 877 877-927-6664. We're going to go put some more detail into this with Don, taking a look at Cliff Natural Resources, because we should be watching this as well, folks. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 11 points right now. The composite that just simply will never give up. You know, I talk about never giving up, folks. Well, the composite is right in that group. It's up this flat, but it's up a $1.50 right now. We're going back out to Odessa, Florida with Don. We're taking a look at Cliff's Natural Resources, CLF. Now, during the break here, Cliff, I did a number of things to a couple of different charts. Right now I'm on the monthly chart out here, and you had mentioned you were asking about downtrending channel lines and trend lines out here. So if we take a look at the longer-term picture, it's always good to know what's going on up above you, just to understand what kind of turbulence you might be running into. Now, the positive here on the monthly chart for Cliffs, if we do the same thing that we were doing on the daily chart, only we get to go take a look at the longer-term trend, it would take you back to April 30th of 2011. You would use the open of that candle session, which is at a price of $99.13. That would really be my first touch point, right around there for my first touch point of the channel line. I'm then looking at the open of April 30th, right around the 69.26. So that does a pretty good job of putting together the top of the descending price channel. Then I'm using, in essence, I'm connecting myself to the close on March 31st, 2013. It's connecting myself to the close on November 30th, 2012, the close on August 31st, 2012. So I think we've pretty much nailed the price channel. Now, the cool thing is that you just slightly broke out of that price channel back in October here, and you stayed above it. And what was also taking place is Cliffs Natural Resources was getting all the way back to its March 09 lows. Now, not exactly the most bullish, thing out there as we speak, but it's a mining stock. It's gotten nailed out here, so that is really to be expected. So what this has done, at least on the longer term chart, is it has busted through that area. You haven't seen any kind of sign of strength on the monthly chart out there, but that's what the monthly chart is showing. The weekly chart shows one of the things that I did was I applied the tool that I've got that I've built for this system for Ensign windows here, that you can immediately identify the primary trading range, the horizontal lines of support and resistance. And I can tell you at the $21.86 mark, so we'll just simply call it $21.90 or what have you, that has the largest number of co-located opens and closes as any other price point on the weekly chart out here. So that's an important area for you to be watching in case the trend continues to the downside out there. If it starts hovering around that area, that's where it may be setting up a potential buy for you. This also shows that it broke the when it broke the descending price channel out here, and so really just traveling in a consolidation zone on the weekly chart. Nothing really stellar that jumps out at you. You had some nice volume, but not wide price spread or anything like that, October of 2013. So, back to the daily time frames out here on the daily time. That's why I wanted to take a look at the larger trend, because the trends that you and I were looking at here, they really are they don't have as much meaning because of the larger trend that's in place. So I wanted to, because you were asking, hey, which one would I give more priority to? If with inside the price, the larger trends, we were seeing some type of subcorrection or something like that, which is not what we're seeing here, then I would give some priority to this little downtrend channel that we're seeing out here. So I think you've got to go with just simply areas of where this broke out and see how it handles those areas, and that's going to be, maybe around because it's trading inside that October 25th level. See what happens when it gets down to 2381. But from a momentum standpoint, I can assure you with certainty out here that if, in fact, Cliffs Natural Resources is able to break above, how do you like that? How do you like certainty? I like certainty. If it can close above the 25-33-ish range out there, it'll at least suggest a counter-trend rally would be underway. And that counter-trend rally inside Cliffs Natural Resources, so it's a place for you to take a stab, could get you up to about the $27 mark, which I think was sort of your target anyways, wasn't it? $27.15, $27.96, something like that?
That's right.
Yeah. So you got that high volume out there. So that may be all that it really is just a counter trend move. However, you've got your spots where you could actually come in. We know where the bear or the bulls are trying to defend their position, and then you also have your exit. And that's really what you need on any trade, that you enter. You have to have your exit strategies, like any business out there. If you got an exit strategy, it's a beautiful thing, and that means bracketed on the top and on the bottom out there. So
I was looking for the $28 mark.
Yeah,
right
so
now.
now 20, it could easily get up to that, back to the November 4th swing point. Now, the cool thing would be if it proves itself and you see volume picking up, then guess what? We've got an A to B equals CD. And the nice thing was what Cliffs Natural Resources did. You had a nice sign of strength on November 1st, and it was nice enough to you to go ahead and make a higher high and a little bit less volume so that you could make that A to B equals CD up. Makes it a little bit easier to take out the November 4th swing point. If you're coming in there with more than 12 million shares, then that says you can get a lot more than $28 out of it. But I would still have that bracketed. If it took you out of the trade, you can always get back in. So that's how I would look at it. Is there something else that you're looking at that maybe
Yeah. I understand what you were talking about on the longer-term charts. One of the things I want to do, redeem myself a little bit here as far as that's concerned. On the weekly,
yes,
we've got two nice we got an A to B equals CD up starting in July of, was that
right.
this year? Yeah.
July of 2013, right.
What encouraged me about that, even though we didn't break the B point with volume, we're coming back to test it on lighter volume, which really did encourage me, which made me think we may get one of these three-wave or four-wave up deals that Basil's always talking about, ABCD.
Yeah,
so
if
we're
we
at
take
the B now on the weekly, and if we go to the C and then possibly the D, I'll be really, really happy. But
yeah, so let's take let's take a look at that. So I'm going to start with the July 5th area. I've also got on this system here the old peak counter, and so we'll go ahead and count it. And, it has only made its second move out there, so you're exactly right. And so you can use the A to B equals CD pattern even on the daily chart. It has only made that peak B out there of November 8th. On the daily chart, if we take a look at our little peak counter, it will come off of the low that was formed on October the 9th out here. Let's do our little count up and see what it actually did. Went ahead and it looks like it made that little well, it actually, according to Basil's system, I believe, I tried to refresh myself on this while he's out, just so that I could assist some of the folks that are utilizing the systems or have been trying to follow along with him. And on that, when it made that peak D, that fourth peak on October 5th, it had an inside day on October 28th out
You're
there.
Looking at a daily.
Yeah, I'm looking at the daily right now. Yeah, I'm sorry.
I was talking about the weekly on the longer term.
On the weekly, absolutely. It made that second peak out there. I was curious what it was doing on the daily time frame as well. So no question, it made that on November the 8th out there. So now it's just coming down into the daily time frame out here. In the daily time frame, that was, let's see what kind of work it's actually done to the downside out here. So let's count the troughs to the downside. Let's see, or let's let the system do the old countdown. So it did make that fourth trough on the trading session of November 29th out there. So that just kind of goes inside with what we've been looking at, as far as areas of support and resistance, the bullish engulfing. So this thing just needs to prove itself to the upside for you, and then you can pull the trigger. And then $28 is probably your target.
Okay, so to answer my original question, you're looking at both the down channel to break that and the 25. What was it, 25.32 or no? I don't know what the number was you said.
Well, it's that bullish engulfing candle from the trading session of December 3rd out there. So I would say the low of 24.30 really becomes your support zone. I'm going to say that this little downtrend channel that you're looking at, it doesn't have as much priority. And the only reason that I say that is because we went back, because it's not traveling with inside any price channel whatsoever when we take a look at the longer-term charts out there.
We really don't seem to have very good volume on it today anyway. But okay, well, you've answered my questions here, and I sure appreciate the time you've taken. I've learned an awful lot from you all, and if there's anybody who hadn't taken any of your courses, they really need to get busy and do it.
Well, thanks so much. I appreciate that, Don. It is always great to hear from you, and always great to help people, and that's thanks for the comment. Really do appreciate it.
Okay, have a good one. Ho, ho, ho.
All righty, you too. You too. That was Don in Odessa, Florida. That was Cliff's Natural Resources. And I would have to say we bisected and dissected that chart out there. Let's go take a look at what's going on inside the commodity sector. If you didn't catch the first hour, we'll just go back to the charts that I showed. We'll take a look at what it is that we are looking at now. Inside of Goldilocks, it has now made the dead cat bounce. It has made the 0.382 retracement level. That is a normal move in a bearish market out here. And there's no question that gold is in a bearish market. Big, huge. Talk about descending price channels. You got a huge one out here. What you should really be paying attention to is the top red diagonal line on the screen out here. And that's where gold really needs to get above. Now, there's a price channel that we need to be paying attention to because that is a long-term price channel out here. So far, gold at 1268.50. And so far it hit 1267.50. Got to love that. That was your dead cat bounce inside of Goldilocks. Now, well, we can also take a look at the black squiggly line on my screen. That is the U.S. dollar index, and that is a inverted chart. That way, when the U.S. dollar index is getting stronger, the black line is actually moving south. It's moving lower so that you can see the price correlation of a stronger dollar and a weaker commodity out here, such as gold. And so what we have seen here, coming off of the low, okay, and this is important, if you come take a look at the trading session back in December the 2nd, December the 3rd out here, we saw the U.S. dollar index get weaker. And what have we seen inside of gold? We've seen the U.S. dollar index also move up. So the correlation is there. And the importance of that is this. And that is that the euro-U.S. dollar on the weekly chart is now running into what we'll call as significant as you possibly can get on this chart, resistance. And that is the red descending price channel. So with the correlation intact right now with regard to the euro-U.S. dollar, which we have seen both to the downside and the upside here recently, if you want to be long gold, you've now got to convince yourself that the that the euro is going to go ahead and break this descending price channel. So all that we're seeing is we're seeing the euro-U.S. dollar move back into an area of resistance that has held since 2008 out here. And you also have some horizontal resistance, which was set up by that big old bearish engulfing candle the week of November, the first out here, as price got right back into that resistance level. So that's what I think how you should take a look at a correlation of charts out there. Let's go to our man Rick, Mr. Head and Shoulders in British Columbia. Rick, thanks for calling. Thanks for holding. How are you doing this morning?
Really good, thanks. Hey, McDonald's. I was just looking at that chart, and
yeah, sure.
Don't know what the news was yesterday.
What's the time frame that you're looking at on McDonald's?
Well, I just think it can go back up to $99 again. Is what it looks to me like. It's got volume sitting up there and everything, but I'd just like to see what you think.
Yeah. Now, if you were taking a look at McDonald's, so I've got on my chart here, I've got my momentum chart, and McDonald's certainly fell into a little bit of a sell mode out here. It was really kind of a cautionary mode. It did that on the trading session of November 27th out here. So what McDonald's has done on any of these bounces out here, it's been held in check by these two little trend lines that are on my screen. And in today's session, McDonald's would have to close above 96.50. We'll call it 90. And if you, well, I don't think we're going to see that today. But if we got to close right now, as we speak on this chart today, above 96.50, then it sets moving up to that falling window, that little gap down. Now, whether it would test the top of the gap in the $99 area. Now, switch over to a chart that takes a look at the volumes in a moment. But that's a daily chart. Now, what we should do, Rick, is obviously I should look at the weekly chart for McDonald's. And so let's go do that. So the weekly chart for McDonald's, that's also showing that this thing is now, it's got the caution line, the cautionary areas where it's trading into, but it also shows at that 96.55-ish or so area, becomes a level that it's got to surpass in order for it to potentially have any kind of a bullish mode. Now let's take a look at McDonald's out here on my Instant Windows software, MCD, and are you trying to place a trade in McDonald's? Are you looking at this as a bellwether for something?
I bought it just for a trade, but it actually doesn't look that bad, is what I'm trying to say. I'm not saying long term or anything. I'm just saying like yesterday it went and broke the previous day on lighter volume, and today it looks like it's going to be lighter again. And then if I put it on I like to quit off and go on a 5-day hourly or something like that.
Yeah.
And I like to look to see where it was a false break from, and if you put it on an hourly, it could go back up to like the $97 mark. Is what it kind of looks like to me.
Well, there's no question that at some point in time it should be able to get back there. And folks, what Rick is looking at, what you can learn from Rick and why he went ahead and took the trade. You've got a nice high volume bar that took place on November the 25th out there. It had 20 million shares. So, and that high of that bar has not been tested. So, and that's in the price range of 98.65 to 99.27. So there's no question that is a price range. Now, what is kind of nice about this was that downdraft that I had mentioned out there, folks, from November 27th. Downdraft it is, but with light volume, only 3.5 million shares on that trading session. What caused that? Do you know, Rick?
Which one's that? Sorry about that.
That little gap down on November 27th. Hey, can you hold on through the break here?
Yeah, you bet.
Absolutely. We're going to go back to Rick in British Columbia. We'll go eat some sushi with Rick. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 12. S&P is flat out here. Composites up 3 points. We're going back out to British Columbia to Rick. Hey, Rick, on the monthly chart, I noticed a little hammer candle that had formed in the month of October. So, I would. Where's your stop on the trade? How much room are you going to give this thing?
I'm just under 95.
Okay. So not much. So that way, you're saying if it takes out this swing point here, then what? You take a look at an A to B equals CD down from December 5th. Yeah.
But on the hourly, it just keeps going lower, but on lighter volume, and I don't know, it doesn't look that bad. I guess is what I'm trying to say. But you say in the bigger picture, you see something.
Well, the bigger picture, when I take a look at McDonald's, I've created this tool out here that really allows me to understand the trends. Whenever I take a look at any kind of position, it's always so good to understand, what is the trend on at least 3 time frames. So what's going on in the monthly, what's going on in the weekly, what's going on in the daily. And at McDonald's, in the monthly and in the weekly, it's an indefinite downtrend. So right now it just says that what you're taking a look at doing is playing a little counter-trend rally move out here.
Yeah, no, that's exactly right. And
that high. Go ahead.
Yeah, and as a friend, Steve, maybe you could take Tom to McDonald's for lunch today.
Okay, I'll do that for you. Hey, thanks so much.
I think you've been talking about the future being pretty bullish on the S&P. I don't want to put words in your mouth.
No, yes, I have.
But take a look at the FXI, and I mean, it's got confirmed ABCs up and everything.
The FXI. Well, let's do that right
Whenever
now.
You got time,
Let's take a look at all 3 trends real quickly. The monthly is in a nice uptrend. Yep. The weekly is in a nice uptrend. The daily is in a nice uptrend. That's when you should be trading versus McDonald's, because that's what your trade. The trend is your friend, and that one shows right there. The FXI, all trends, all 3 time frames to the upside.
Yeah, that's unreal, isn't it? That's one.
Yeah, that's great.
That's almost a bellwether, kind of like pardon the expression, but.
No, that's great. That's great.
Okay, well, you take care.
Thanks so much for calling, Rick. Let's go out to John in Philly, who's digging out from a major snowstorm. John, how you doing?
Brr. That's all I can say, Steve.
Hey, well, that's good. You get to use some of that natural gas. Although I don't know, do you use natural gas to heat your house up there?
I would just like you guys down there in Clearwater to stop rubbing it in the 80-degree temperatures you're enjoying.
Hey, I'm when I'm done with this show, I'm going to go look for a Chapman Wave, and really ride one today. So I think the water temperature is pretty nice out there. So we won't rub it. It's for exercise purposes, though.
Steve, a question for you. I know you analyze expansions and contractions in a very detailed way. I want to draw your attention to the NASDAQ 100 NDX.
Yep.
The NDX made a high 35.24, a record high for the move. It's right at it effectively at the moment, 35.18. My question, is there, or in your work, have you uncovered or discovered any NDX figures, numbers, that line up as targets that we might just monitor, that we might monitor as NDX reaches those for indications of turning point tops?
Yeah, I would say, right now, because it's a new territory, the key number to be looking for is right around the 3606 range. That is its next upper-level primary trading range boundary line. So right around 3606 is the number where it is likely headed to as we speak right now. So 3205 was the lower, and I'm on a monthly chart out here, so it looks to me like that's the number that we should be paying attention to and watching. John, I wish I had more time for you. We'll take a look at the index. I'll take a look at the index tomorrow during the opening show. And stay warm up there. Folks, have a great Tuesday. Great to be with you. I look forward to seeing you tomorrow morning. Have a great day. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.